It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
Now, for the first time in modern property history, Brisbane's entry-level unit market is officially tougher than Sydney's. Entry prices have surged 660,000. That is about 130,000 higher in just 1 year, now sitting above Sydney's equivalent. After 5 years of 80% growth, saving a 20% deposit takes nearly 5 years for a young couple. Mortgage repayments, now they are pushing close to stress levels. Brisbane, you've got to think back, not that long ago, was once the affordable alternative. Today, it's right up there with Sydney. Once again, pressure on young couples trying to get into the housing market.
That's correct. I think we're seeing that massive growth spurt over the last 12 months, even in the last 6 months. I think the data is a little bit lagging, but I think it's even heavier now in the last 6 months. We've seen a lot more shortage as well in the market.
Yeah, and just in terms of those repayments consume roughly half a young couple's income. That is really hurting them. And let's talk about the rental market in Brisbane. You were telling me off air that some of the commentators are suggesting that maybe the government should step in regarding developers with a fixed cap rental scenario. It doesn't have to be right across the development, but perhaps a percentage of them.
I agree. Look, I think developers should really look at, or the government should look at putting some restrictions on developers. Let's say there's 300 units, put a 10% buffer on that, saying 10% of those must be fixed cap rented for 3 or 4 years for low income earners, and that might help people with stability that are struggling to get into the rental market or to buy. I really do think with the housing crisis at the moment that we have Australia-wide, that could be a solution that may help, let the developers catch up in building things, because as we sit here on this podcast, I'm looking out from where I am and quite fortunate where I am. I can see a lot of development potential that's hanging around, but no one's developing because no one can afford it.
Have you got people saying, right, we want to buy this property, it's got to have enough land because we've got multi-generational people we're looking after, we want to put a tiny home on the back of the property? This seems to be sort of gathering momentum. Are you seeing that where you are?
Oh, definitely. So we've got a house going to auction and it's on a 1,600 square metre block. And we've got about 3 or 4 people that are quite interested in it that come to the auction that are looking at it to put a granny flat at the back, because they're like, this is a 5-bedroom house, great for now, but when my kids get older, they're not going to be able to afford a house or a unit. So let's build a granny flat at the back. We'll move into the back. The kids can have the front. And that's becoming more and more, popular with families. My cousin's a town planner in Brisbane and he's working with a lot of people at the moment where they're putting granny flats in the back for future-proofing themselves, I guess.
And we're going to have a look at the mum and dad situation. It is no longer, I put it to you, Michael, an optional thing. It's a strategic thing. Agents report first home buyers increasingly relying on parental support. I mean, where would the market be if we didn't have mums and dads stepping into the breach? You've just got to look at 1-bedroom apartments. Now, at one time, 1-bedders were very much overlooked. They're now attracting multiple offers and fierce investor competition. So how busy is the mum and dad market where you are?
Craig, I can tell you now, hand on heart, like every time we see a first homeowner coming through, they've got mum and dad next to them, helping out with deposits or on the actual title itself, because in your 25 to 30, you might be on $100,000. That's not going to get you, much of an apartment if you're looking in the inner city. It doesn't matter how far out of Brisbane you go. It's still the same. We're seeing in the suburbs that I work in West End, South Brisbane, especially in South Brisbane, you're looking, $750 plus for a 1-bedroom apartment. That's about 63, 64 square meters. So it's not massive. To get something of quality, something of size, you need a bit of help. And that's what we're finding a lot more lately.
Now, you're a younger guy, talking of the mum and dads stepping in, something that seems to be gaining a little bit more momentum is friends deciding to buy, go in together. Maybe there's even three of them that say, right, let's buy a 3-bedroom apartment, maybe a house, and we'll do it that way. You've probably got maybe some friends that have looked at that scenario.
I do. One of my closest friends they're doing that at the moment. It's a way to get in the market, get the equity out, get the next one and keep going. But because, it's easier buying something when you've got two incomes coming into it instead of a single income.
Good morning, Craig, and good morning to all the Australian listeners. Yes, I have to say, normally speaking, I would have enjoyed having a nice brunch somewhere in Dubai, whereas what did happen has led me to think I would have much preferred to be having a brunch in a nice Australian cafe somewhere thousands of miles away, rather than worrying about what is unfolding and what might be coming next.
Yeah, and I guess that after the weekend, Monday arrives, you think, well, perhaps that's going to sort of cool down, but there were more explosions.
Yeah, you're right, Craig. We thought that obviously after the weekend, things had actually quietened down and we were going to return to some sort of normality. We heard 3 more loud explosions, which obviously is pointing to the fact that it isn't over. And, we've got these to contend with. Hopefully we won't see any more, but it's a very worrying time at the moment, Craig.
I was surprised at just how many missiles and drones they were reporting. Apparently 137 missiles, 209 drones, and maybe around 32 that got through. So that is an amazing achievement, really, to be able to shoot down, and all that trust that is well deserved with the UAE's air defence systems. Now, I just want to sort of come back to this public sentiment, because some expats have expressed a direct desire to leave immediately. So what is your take on that in terms of expats wanting to get out so quickly?
Honestly, I don't believe it. Tourists, yes, I understand. Clearly, they're here on holiday. Their home is elsewhere. That I can understand from tourists. I don't believe it for 1 minute that expats are wanting to pack up and leave as quickly as perhaps some of these reports are saying. We all need time to understand whether this is now the new norm. But sort of going back to the air defence, I mean, considering we've never had a problem like this, for the UAE government to actually be so ready and so successful as well in stopping these attacks, that needs to be applauded.
Yeah, and we should have a look at the real estate property investment sentiment, because the real estate market is currently experiencing a pause in decision-making as a result, rather than a panic sell-off as investors wait for more clarity on regional stability, which is, you got to do that. You've got to wait to see how this is going to play out. You don't want to get too carried away in terms of what the market might knee-jerk react in this way.
Yeah, that's right. And it's normal for people who perhaps are buying their first property here in Dubai to sort of consider their position, whilst we've not been sort of subject to anything like this before. So this is new territory for us. What has shown in the past is that when people decide not to proceed with something, Dubai does get back to its normal ways very quickly. And in fact, those people then sort of miss out. And when they do decide to eventually come back in, they find that the properties they wanted have been sold, and the ones that are available are at a much higher price. This may take a little bit longer this time round, because sentiment is very important. We are selling primarily to the world, a world that isn't used to living in conditions like this.
Looking at the mid-market apartments, this is interesting, Mario, because this segment is considered more vulnerable. Some of the analysts predicting that a 5 to 10% correction for the mid-tier apartments this year could happen due to a massive surge in new supply. So that will be interesting to see just what happens in that mid-market apartment space.
Yeah, that's right. There's always a segment in the market that probably suffers more than others, or doesn't go up as much as others. And the mid-tier apartments is that segment. Obviously, with so many apartments due to be handed over later this year and next year, it was always going to struggle in a market that perhaps was looking at more of a stabilization. And now with what's happened, I think this is the marketplace that will actually struggle the most, purely and simply down to the sheer numbers that will be available to anybody that wishes to buy.
You must have really been wrestling with this, the fact that here is something that has happened. It's never happened before, and everything is sort of thrown out the window.
You're 100% right. I mean, I still feel, and I felt at the time, quite angry. This is not our war. This is nothing to do with us. And yet we seem to be punished just literally by association. The emotion was running very, very high. Yes, I've never had to experience this before. I can now tick that off the checklist, as it were. Life goes on, and we are not being targeted as such. And I want to make that message very, very clear. We are not at war. It's collateral damage by association. But yes, I was very, very angry.
The developer proposing a 91-storey Trump Tower on the Gold Coast was previously linked to a company collapse that left $28 million owed to creditors. Yes, a liquidator's report into the 2010 failure. Now, the director was reportedly uncontactable during the process and failed to provide key financial documents. And now we've got this new $1.5 billion surfers paradise proposal that has drawn attention given that history. Now, a question for you on a Monday is, would you buy into the Trump brand and pay a premium for doing so? Or is that like buying a liability that might come back and bite you? To buy or not to buy into the Trump 91-storey tower on the Gold Coast?
I'll be very frank, the Gold Coast isn't for me, but I think you've always just got to be very careful when you're buying anything off the plan. And, I think buyers really have to do their due diligence. You've always got to be cautious when you're buying into, premium brands and premium names. Just scratch the surface and look at what are you really buying.
Yeah, I'm going to be very interested just to see how the uptake is on this. That report came out of the ABC, so they're raising the alarm bells, and we'll wait and see. But I'm sure that plenty of people have got some comments to make when it comes to Trump. Now, Perth sales activity, that has lifted strongly of late, up 17.1% to 884 transactions. House sales have led the charge, rising 25.6%, while unit sales increased modestly and land sales softened. The good news there is, I guess, for people selling, it is up.
Yeah, look, I think it's no surprise when we're coming off all-time listing lows. In fact, I think about 3-4 weeks ago, I think we almost hit, what seemed to be the absolute bottom in recent times for listing numbers. I think that's, this is just that flow-on effect for available stock on market. I think it's positive. It shows that there are some vendors out there who have been sitting on the fence about getting their properties to market. Finally doing so can only be a good thing for an extremely constrained supply market in Perth.
And tell us a little about Byford, because that recorded the most transactions and prices ranged from just over $500,000 in Medina to just over $2.5 million in Alfred Cove.
Yeah, well, I might just start with the last one first there. Alfred Cove, a much older established suburb, not surprising to see that touching those highs, a really beautiful part of Perth and as I said, a much older part of Perth. But look, Byford probably comes as no surprise now. It is a lot further out of the city, but is now very well connected with the Byford railway line. So the extension of the railway line is now complete, the electrification to Byford, a brand new station, and real easy connectivity all the way through those southern and southeastern suburbs straight to the city and to the CBD. So buyers would be looking at Byford. Byford provides first home buyers with a really good opportunity to enter the market, as well as established buyers looking for those larger lifestyle properties.
Yeah, and I want to talk to you especially this morning about the hidden cost of the property boom. Australia's property boom has created huge wealth for homeowners, as we know, but there's this hidden cost that many people don't see coming. It is insurance. And as property values surge, the cost of the insurance for those homeowners is climbing, and it's climbing pretty fast. For many households, the annual insurance renewal is now becoming one of the biggest financial shocks to the household budget. And you guys sort of covered that in a recent piece.
Yes, it looks about 78% of Australians may have had their home insurance premiums increase quite significantly in the last 12 months. It's a really big factor that a lot of people don't consider when they think about the costs of owning property. We've seen property prices grow so much that I think a lot of people have become almost victims of our own success when it comes to these rising prices, because as prices go up, the value of the asset is higher, and it's a much bigger cost for insurers to therefore cover those properties and replace them if something goes wrong. So we're seeing this big increase with the insurance premiums, which really does make the average person's costs go up a lot higher than they might expect.
It's almost nearly 4.5 million households dealing with these higher premiums, adding another pressure alongside the rising mortgages. Let's talk about the increase, which isn't coming from just one factor. Insurers are dealing with more natural disasters, higher home building costs and expensive materials. This is just all fueling, isn't it, the problem around house insurance?
Well, that's right, Craig. Yeah, it's really a perfect storm of factors. Building costs we've seen just increased massively over the last 4 or 5 years. Inflation has touched really every part of the economy and every part of the housing supply chain, labour costs as well. So simply, any cost to replace a property just are much, much more expensive than they used to be, in addition to the actual, higher value of the properties themselves. And then, of course, we've seen, natural disasters becoming much sort of more common factor for a lot more Australians, especially in certain parts of the country, parts of Queensland, parts of the Northern Territory, obviously most affected. We've seen the risk factor increase in certain neighbourhoods as well, which just all compounds to make insurance a much, much more expensive proposition for a lot more Australian people.
And I just want to come back to the comments that I made at the top about the RBA Governor Michelle Bullock saying that it is way too early to know how the escalating war conflict will impact Australia's economy and as a result really hurt Aussies in their wallets. She had these comments to make earlier in the week.
Some people are doing it tougher, as you've mentioned, and that might be people, for example, with mortgages on lower incomes, perhaps, who've got less spare income. There's other people that are not going to feel it quite as much. And in fact, what we know is that there is a large chunk of people with mortgages that, as interest rates have come down, have opted, in fact, to save it. They're not spending it, they're socking it away. The interest rate, though, is a very blunt instrument, as I've said before, and we know that it does work in slowing the economy, but it does impact people in different ways. Only thing I would say to people who are badly affected by this and are struggling to make ends meet is that part of the reason they are struggling to make ends meet is not just people with mortgages. Renters actually are often struggling as well. Inflation is what's caused them lots of trouble. It's the price level. The price level has gone up 20 to 25% over the last few years, and people see that every time they walk into a supermarket or they go to the doctor or whatever. That's, I think, what's hurting people. That's why people, I don't think, are very confident when you see consumer confidence surveys.
We connect you to the best real estate information across Australia. The Real Estate Podcast.